The key thing to remember about Bitcoin is probably going to do well as long as the U.S. stock market keeps going up. And so far, that's the case this year now. It's backing off from record highs. It's becoming highly, I would say, leveraged at these levels. It's normal for that, and it's normal for high volatility. And right now, we're seeing a lot of pile-on speculation. But on the year, for a while, it was up about 30%. Gold's up about 30%. The stock market's up about 10%. Typically, Bitcoin trades about 2 to 3 times the volatility of the stock market, so it should be up about 30% if the stock market's up 10%. But the thing is, it's a highly volatile at-risk asset, new store of value that's got a very high correlation to the stock market versus gold, which is known as negative or zero, basically zero correlation to the stock market doing well. So I'm concerned that it's signaling there's a bit of a risk going on in the market. Also remember, it's August, and the VIX yesterday dropped to 14.5, the lowest on the year. If that VIX picks up a little bit and we get back to some normal volatility, Bitcoin might be the first indicator to suffer.
Hey, Mike, you got to explain this for me. So what exactly is Bitcoin? Is it a commodity? Is it a currency? Is it a speculative asset? How would you categorize it?
I think it's all the above. Digital gold is where I started getting really bullish with Bitcoin back, 5, 6 years ago. But now I find it just a highly speculative digital asset. So the good thing to remember about Bitcoin is in 2009, there was one cryptocurrency. Now, according to CoinMarketCap.com, there's 19 million of them. So there's an unlimited supply of these things. The key thing that's really been notable and delightful to see the Trump administration tilt from an antagonist to really understanding, well, this space is going to the dollar for its base layer, i.e. stablecoins or crypto dollars. They're pushing almost 300 billion now, and they all invest in treasury. So the technology is awesome. Tokenization is awesome. That's happening. But the key thing is we're in that speculative frenzy now, and it's highly related to the stock market. And I'll end with one key fact. Like I mentioned, there's unlimited supply of cryptocurrencies, and there's only 4 precious metals, gold, silver, platinum, and palladium. So I'm still kind of sticking with the rock this year.
All right. So what ongoing role are ETFs, Bitcoin ETFs, playing in the price performance of Bitcoin at these days, do you think? I guess they're just really a lot of income, a lot of demand, a lot of inflows, but a lot of it's just kind of catch up. Because remember, we've been waiting for these ETFs for 10 years. When we launched that big Bloomberg Galaxy Crypto Index in 2018, the idea was someday it's going to be tracked by ETFs. An index to track the space. Not just one, not just picking a winner. So massive inflows. The problem is, Paul, they're all expecting returns to be as good as they were in the past, and they're expecting the Bitcoin to beat the stock market, which it has. The key risk is it's basically leveraged stock market. So the stock market goes up, Bitcoin should go up more. The problem is now it's becoming mature, volatility is declining, everybody's piling on. Have we seen this before? It reminds me of 1999 in internet stocks. Oh boy, I was there.
You were there, been there, done that. So you mentioned volatility, Mike. So how does Bitcoin's volatility compare to traditional commodities? I mean, does that change how investors treat it?
Well, I always compare it to gold. So the Bitcoin to gold ratio, the ounces of Bitcoin, ounces of gold equal to 1 Bitcoin. Right now it's about 35 ounces. That's the same as when it first peaked in 2021. So that leading indicator has been flat for a while. It's a bit wary. And Bitcoin typically trades about 3 times the volatility of gold. So that's where I really compare it to. And so the thing is, they're negatively correlated, but also it's been a good leading indicator. The thing is, it's been stalled and lagging for a while, that Bitcoin to gold ratio. So I'm concerned it's telling us there's going to be a problem. So as we tilt towards the end of the year, this Bitcoin to gold ratio needs to go up, or it's telling us there's a problem that is more likely to go down. And that's why I point out, with volatility this low in the stock market and on a record high, Bitcoin to gold, I think, is a good leading indicator. For now, I'm worried, and that's why I'm sticking with gold versus Bitcoin this year.